The markets are crashing again. Oh, never mind. It was just a dip. You bought the dip, right? So how do we read a true market sell-off? Let's start with the two most important things you can do during a market sell-off. Observe and study. This video will explain how. I'm Skylar James, welcome back to the channel. And in case you wonder where I'm filming from, that is Casa del Lago Unam. That's where I'll be staying for the next month. The market has become even more volatile since the beginning of December as the world has evaluated the severity of Omicron. Here's the analysis I did during that sell-off. First, I look at individual holdings and I ask, why are some of them more red than others? Usually the biggest drops share one of three different traits. I look for those traits and then I do a comparison. Let me show you how. The first trait I often see is that stocks with lofty multiples fall more than the value stock. I'm using the term value very broadly. Lofty multiple plays are typical momentum stock with weak fundamentals, and that doesn't leave them much support to lean on during a market sell-off. In fact, the stocks with lofty multiples are typically more volatile than their reasonably valued peers on any given day, not just during sell-offs. This volatility is measured and known as beta. Beta compares a stock or ETF's volatility compared to the S&P 500. A beta over 1 means it's more volatile than the S&P. So during a sell-off, high beta stocks, aka stocks with lofty multiples, generally fall the most. That's the trait 1 I noticed during a sell-off. Are you interested in high beta investing? Let me know your thoughts on the topic down below in the comments. And don't forget to subscribe. I want feedback on how other people approach broad sell-offs like this. The second trait I often see in sell-offs is that stocks that have recently run up tend to be more susceptible to a bigger pullback. It doesn't always happen, but think about it with your own trades. If you made a quick 20% and the market starts to look a little shaky, you might sell. You might ring the register bell and keep those profits. So trait 2, stocks that recently ran up are more likely to fall in a broad sell-off. And trait 3 is a little more fundamental and it asks, did something change with the story of this company recently? If there's a fundamental change that coincidentally times with a broad sell-off, the stock might fall further. What's a fundamental change? Something like the scathing reports about Activision Blizzard's unsafe workplace, or reports of Intel failing to manufacture 7nm chips. That's trait 3, the story of the stock changed. Those are the 3 traits I see most in the reddest stocks on the red days. High beta / lofty multiples, stocks that recently ran up, or stocks with a changing storyline. But I want to go further than that. What's on sale? What's a deal? And yes, answering that requires looking at fundamentals. It requires looking at the price chart and the future outlook of the company. But you can get a lot of information by comparing a stock to an ETF that holds the stock during a sell-off. Compare a single semiconductor like an AMD to a semiconductor ETF like SMH or SOXQ. Did AMD fall further than its peers? How about Taiwan Semi? Same question. If you wanted to buy one of those companies and it dropped more than the Semi ETF, that might be a sign that the stock is on sale. It depends on your personal risk appetite. Speaking of risk, there's no risk in hitting the like button or subscribing to the channel, and I appreciate it. This insight on stocks during a sell-off can also be applied to ETFs. Take a look at DAT or WCBR. Those both fell further than the broad tech ETFs in the Omicron sell-off. They hold higher beta stocks than your VGT or XLK. This gives you a chance to compare apples to oranges. Compare DAT to VGT. Maybe there's enough difference between the two on a red day that DAT suddenly looks like a buy. Again, it depends on your risk appetite. This is just my process. What you do with the information as you run through the process for yourself is all in your control. So review this video a second time and make sure you look for those 3 traits. Those traits that are high beta stocks tend to fall further than the broad market, as do stocks with big recent run-ups or companies with changing stories. And then compare a single stock on your shopping list to its sector ETF. That can shine some light on whether the stock is on sale or not. Just like comparing a specialized ETF to a broad ETF can tell you if the specialized ETF is on sale or not. Thanks for watching, and I'll see you on the next one.